Good morning. It's Monday, July 30th. This is George Kachuk with Know Your Options Inc. coming to you from a CME Group trading floor in Chicago. This morning the markets are positive. What we're seeing is a follow-up from last week's rally. So taking a step back, early in the week, the NASDAQ and the S&P, early in the week, were getting hit hard, pretty hard in volume. However, we had a reversal day, slight reversal on Wednesday, and then Thursday, Friday, a very big rally and very big volume. So what does this mean? Well, the NASDAQ, again, is above that 2,900 level, which we always view as support resistance. So right now to the upside, the NASDAQ could see some resistance at about 3,000. The S&P 500, again, above that 1,360 level, trading about 1,385 this morning. So we're looking to see if the S&P can take out the 1,400 level. That would be the next level on the upside. And the downside, of course, 1,360, that should be a support level. Now, so we're in this market. It looks like we got a new uptrend going on. We just came out of a correction. So the question is, where do you look for your potential leaders if you want to be long equities? Well, one of the screens we run, and we'll run various screens, is called a relative strength screen. And what relative strength is exactly what it sounds like, a very simple concept. What equities are stronger relative to all the other equities? Now, a lot of charting software provides you a relative strength line. So here's the concept behind it. Let's say the market's correcting. The market's going down, but you see a stock where the relative strength line is moving up. So what that tells us is that this stock, institutions are not eager to unload this kind of stock. They're willing to hold on to shares, waiting for the next uptrend, and typically these stocks may be the first out of the gate. So let's step back, take a case in point. If you look at Pharmacyclics, it's a biotech company. It tried to stage a breakout past the 29 area in late May. It broke out a point or two, and then with the weight of the market, it turned back down. But then June 4th, when the market bottomed, Pharmacyclics was the first stock out of the gate, basically doubled in 5 weeks, went from about $29 to $60. But the key thing here was that the relative strength in this stock was much higher than all other stocks. Its relative strength line was at a new high, and its slope was positive. So this told us that this stock is outperforming all other stocks. Even though it was moving sideways, but on a relative basis, it was acting stronger. Okay, so we fast forward to today. Where does that leave us? Well, last week we were going over a few stocks, looking what relative strength was and which were the stronger ones. And for instance, in the 3D printing arena, you have two stocks, Triple D Systems and Stratasys Systems. They too, while the market still had some pressure on it earlier in the week, their relative strength line was moving up. And once the pressure off the market was relieved Thursday and Friday, the stocks shot up, and the first one's out of the gate, breaking out into new highs. Now, please keep in mind, of course, it isn't as simple as it is. You want to have all the other factors lined up, which we'll probably discuss in other broadcasts, what makes a winning stock. But this is just one of the simple things. You should always be looking, where's your stock relative to the rest of the market? We call that relative strength, and you can use this as your guide. And of course, let price and volume be your guide. And this is George Kachuk with Know Your Options Inc., coming to you from a CME Group trading floor in Chicago. Thank you.